The altcoin markets are waking up as some of the altcoins are breaking out massively, and my altcoin portfolio is finally rising from the ashes, which means that it's time to be trading and that it's time to finally make money. Let's get started. Before we continue with this episode, I would like to thank everyone for tuning in again, as we were not posting any video for the past few weeks. We have been traveling to Miami to be recording 5 episodes. Actually 6, as we had one the day after we came back from Miami as well. Expect a lot of fun because we had Grant Cardone on the show. He has been one of the most entertaining guests that I've had. We had Charles Hoskinson on the show talking about the future of Cardano and crypto. And we had Jordi Visser on the show to talk about Bitcoin, why it's lagging behind, what the role of AI is, and why markets are as they are. And a lot of people are just questioning the why question, which seems to be irrelevant. So that's what we have been focusing on, but now we are back with the content here and we're going to be making more posts. And in this video, we're looking to basically give you an update on the altcoin portfolio, as we've seen that the markets have been waking up. Bitcoin is attacking the highs, the Nasdaq is printing new all-time highs, and I've been trying to make more in-depth content on X to basically reason on why these things are happening and how you can use that in order to make trades for yourself. Because if we look at the entire rally of the market, the first question becomes, how far can we go up? And should we be crashing from here? I don't know why, but people immediately start to question a rally like this and start to fear a potential recession. But if you really look at the data points, then we might be in for a longer run, and you're better off just going with the flow and just following the trend. And there is something that is probably a little bit fearful, which is the fact that all those companies that rise out of nowhere and go vertical shows that we are at the end stage of a financial cycle, but it doesn't mean that it needs to happen right now. So we need to explain why the indices are doing as great as they are and crypto is just lagging behind heavily. But when it starts to pick up, it's going to be a big runner. And that's what I try to do with this visual, which is, if you look at the chart of Bitcoin versus gold, then gold has technically been doing great. In Q4 of last year, it started to go into a parabolic move, and actually Bitcoin started to go in a parabolic move downwards. The reason for that is quite simple. Markets move based on institutions, and institutions have asset managers, and asset managers are building portfolios based on risk. So if you build a basket where gold is your anchor and you have Bitcoin aside from that, if the asset that is basically your risk neutral or risk free asset goes up and the volatility goes up, the risk of that asset goes up. So how can you hedge that position? Well, you're going to hedge that position by selling off other assets that are more risky. That is why you started to see a trend where gold continued to rally up and Bitcoin continued to fall down in Q4 of last year. That basically ended in February of 2026. And since then, since the war in Iran has started, you've seen that gold has basically flatlined. The volatility on commodities have gone down. And as a response to that, we've seen the Nasdaq bouncing up. And when the Nasdaq bounces up, Bitcoin follows with a few more weeks. Because of the fact that when the regime is switching from risk off to risk on, you won't be buying Bitcoin first. You're going to be buying indices like the Nasdaq or the S&P first. And then when that is just consolidating or just doing fine, you'll be looking into other assets. And that's when you started to see Bitcoin follow through, where we also have been seeing a lot of inflows happening in the Bitcoin ETF. I think there was more than 1.5 billion of inflows in the ETF at the start of May. And the interesting fact is that during this week, we saw a new all-time high in AUM and holders for the Bitcoin ETF. So institutional buyers for the Bitcoin ETF are sticky. They haven't been selling in the entire crash. They expect the markets to continue to rally. The Bitcoin OGs were selling. But overall, we've just seen the Nasdaq go up. Bitcoin is following. And now we are in that stage where the altcoins are following through, which means that finally, if Bitcoin goes up 10%, altcoins are likely to do a better percentage from that, and that is going to yield me a good return with the altcoin portfolio. The only thing that we want to watch is where we can find signals of whether the altcoin markets are going to change, and that's when the copper versus gold chart comes in. I posted this on Wednesday on Twitter, where you can see the correlation between copper versus gold and ETH versus Bitcoin. If copper outperforms gold, you can technically say that the business cycle is going to be outperforming, there's a risk-on appetite, and people are willing to take more risk. And then as a response to that, Ethereum outperforms Bitcoin or altcoins in general. This can take a few weeks before it starts to catch up, maybe even a few months. But given the fact that copper has been breaking out of the downtrend for the first time in 4 years, it also feels the same for altcoins. Because finally, some altcoins have been breaking out of their downtrends against Bitcoin, which then means that we can start making a nice return when it comes to the altcoin portfolio. And in the past few weeks, I've made some strong decisions there. So it's time to discuss the altcoin portfolio, including the strategy that I'm going for in the coming weeks. I'm sorry to stop you here for a second, but this episode is brought to you by OKX, our partner, and they just had their biggest announcement, which is futures are back in Europe. It's called XPerps, which is a fully regulated platform within Europe to trade futures in crypto, which we haven't had for the last 1.5 years. You can use all the crypto that you have on your exchange as collateral to trade those futures within the platform. And the best part, the liquidity in the books is matching with their global engine, which is the global markets on OKX. And you can actually use the collateral in the hedge mode to hedge your positions and therefore still generate the funding rate that is on the exchange available. The best part, if you sign up today, you get $36 in free if you are in the first 10,000 users that sign up, with the link beneath in the description. Now let's continue back to the episode. The altcoin portfolio has been going up by $20,000, and that is just a slight move because we're still down 50%, but it's better than being down 75%. And you can already see the impact of the DCAs that I've been doing over the past few months. Because of that, I just need to double up, which seems like it's a lot, but a double up is quite fastly achieved, given the fact that most of the coins are actually going to start their moves, and they start to increase the momentum, and the more the momentum comes in, the heavier the moves will be. However, over the past period, I've been adding into my altcoin portfolio. I've been doing this, as I mentioned, the DCA strategy. I've posted on this on Twitter, where there's another $10,000 that I added on the 1st of May. And on one of the other tweets, I said, I don't want to continue DCAing. So I assume that somewhere here, or perhaps we've already seen the bottom, which means that I don't want to continue adding money into the markets for an extensive period of time. Most likely I'll be doing it 4 more times, which is the 1st of June, 1st of July, 1st of August and 1st of September, and then I'll quit doing the DCAs. And it does not mean that if I'm going to DCA, that I need to use the money to buy positions at that moment in time. I can easily add it into cash if I don't see an opportunity right now, or if I want to wait for a better option to get into those positions. However, adding money right now is adding it into positions that actually make sense and that have been showing some strength. So on the 1st of May, I've been adding $5,000 into NEAR at the valuations of that day. I've been adding $1,000 into Renzo at these valuations, and I've added $4,000 into cash simply to wait for mean reversion trading strategies, which is if the trend starts to go up and there's a certain heavy correction, I want to buy that heavy correction based on certain triggers to quickly make the bounce or to continue trading the trend, or allocating when I see conviction on trends to occur, which basically ended up in a portfolio that was structured with $62,000 mostly into Tau and Near, as you can see, 22% in Tau and 34% into Near, and also having positions in Renzo, Psy, Optimism, Wormhole. You can see the bottom line is now including more cash. Then on the 10th of May, we started to see some momentum, which is great. We've got a portfolio that has a total of 160K invested. The current status on that day was $78,000. Then I started to explain that we have 4 more months of DCAing to happen. But I was actually looking at some of the charts, which I'll be discussing in a little bit. And it started to show the fact that some stuff was a little overextended. What I do by that is I'm looking at the daily and the 3-day charts on both the USD and Bitcoin valuations to see whether or not they have a standard deviation that actually reached the upside too much. So that means that there's most likely a correction going to take place, or at least some sort of mean reversion back towards the fair price. And that's when I want to start scaling off positions. And in this phase, we can still allocate more into positions that haven't been following through. And that is where Renzo came in. So Renzo was actually making that move. As you can see, this is the daily time frame where the gap between the current price and the moving average, in this case the 21 moving average, became relatively large. And that means that there's a lot more risk to be holding that position. It doesn't necessarily mean that we need to fall back quite heavily, but combining this with the fact that it has reached an RSI that we haven't been seeing at all since the launch, there is a clear case to be selling that position partially in order to de-risk my portfolio a little bit. So that's when I decided to sell $1,000 into Renzo. And that's when I also decided to add a little bit more into the position of Wormhole, which is still down a lot, as you can see. But essentially, since the bottom in February was made on Bitcoin, altcoins have been falling down, and this has created a massive bullish divergence, which then indicates that the current upwards grind that we're seeing is not that far away from those moving averages, and there is still a lot more upside to come in the upcoming weeks. So coins are basically just following each other, and the first narrative that is being moved, that is going to be having that momentum, that is where you want to take the profits and then move it into the other one to compound your entire portfolio. The other argument that I found on the fact that Wormhole is probably very interesting to look at is the fact that there's so much volume being traded right now, which is usually preceding a potential breakout to the upside. Brings me back to the portfolio. As you can see, I've sold $1,000 in Renzo during that stage, and I've bought $2,000 in Wormhole at 1.6 cents, and I've added $1,000 from that USDC valuation here into Wormhole. So both Renzo and Wormhole are quite large at this point, but I'm looking to actually stack more returns there. On top of that, in the previous days, Peak has been moving upwards. It's currently seeing here on the chart at 1.8 cents, but it's already at 2.5. So I'm also monitoring that position. But nicely enough, we can finally start making a return against the total invested that I have, but also against Bitcoin. So I'm sure that in the coming periods, we will be making more trading decisions there, given the fact that most of the altcoins are currently outperforming versus Bitcoin. Which brings me to the question of what is the game plan? Well, the game plan is that I won't be changing many altcoins in the portfolio. I prefer to look at them in a strategic way where I want to trade them the best as I could, which means that if they become vertical or parabolic or they start to rally upwards, I want to start de-risking my portfolio, potentially moving more towards cash, but also moving more towards Bitcoin in order to de-risk my portfolio and to be able to be remaining flexible if there's going to be a standard 30 to 50% correction taking place on those altcoins. If I see Bitcoin peaking out or looking to consolidate or to correct, that is going to be a case where I'm looking to be de-risking my entire portfolio. So yes, I've been holding the entire portfolio down, and finally we can start seeing the first breakouts taking place. But it doesn't mean that I'm consistently going to hold it all the way up. I'm actually looking to compound and de-risk and improve the volatility of my portfolio and therefore the return. But I'm quite sure that in the coming months, my portfolio is going to be back into profits, and that's where the fun starts. So make sure to subscribe to this YouTube channel, and I'll see you again next week. Ciao.